Hi and welcome to this week's video analysis for the FX majors going into the week 18th of March 2019. I think there's going to be a real focus on the dollar this week. We're going to look at all the different FX majors, breaking down the different time frames, highlighting support and resistance levels, basically what we're expecting going into this week. So what we're going to do, we're going to start off with the dollar index. Here we can see a bullish channel formation. The monthly chart highlights rallies being rejected just outside this Ishimoku cloud. Most important thing in this time frame is this P9, perfected 9. DMARC indicator often indicates the end of a trend or at least a correction to the downside. So that's giving us a bearish bias. If we go to the weekly chart, we can see an impulse move to the downside, 1, 2, 3, 4, 5, Elliott wave. Corrective choppy move higher, looks like an ending wedge pattern. We got a 61.8% extension level at 97.86. We did make a higher high. We did post an inside week last week. Now that does show an element of indecision. However, the ending wedge formation and the 61.8% Fibonacci offer that bearish bias. If we go to the daily chart, mixed volatile trading, even though we posted that inside week, we can see quite an impulse move for the week before. Last 2 days, insider army or inside soldiers. It's an expanding wedge formation, and expanding wedge formation has a bias to break to the downside. Now, we could see a rally up towards that 61.8% Fibonacci level. However, when we're looking at the shorter time frame, this is the 4-hour chart, then it looks like we've got again an Elliott wave formation that looks to be playing out quite well. So we're going to wait and focus on this 261.8% extension level, which is located at 95.64. If we come back here, we can see it's close to the trend of higher lows of this wedge formation, so we're probably going to see a bounce to the upside. So I don't think now is the time really to be shorting the dollar. I think the time to short the dollar is when we see a corrective bounce off that trend of higher lows and that 261.8% extension level. Because when we move down, or if we move down, I should say, towards this 261.8% extension level, then at least it confirms the change of wave sequences. So instead of having bullish 5 wave counts, we've now got bearish 5 wave counts, and then we should see a corrective A, B, C, D formation to the upside, and I believe that's the time to really get involved in what we believe will be a lower dollar move. So let's reflect that back onto the FX majors. Let's see what's going on. Monthly chart for euro dollar, nothing really exciting. Dips sort of been bought into. Might post an inverted hammer at the end of this month. That's often a clear indication that a base is in place. If we go to this time frame, I suppose this is the most important time frame, 61.8% has found buying interest after a 5 wave count to the upside. So again, the whole move lower being corrective. Insider army posted on the weekly chart, slight indication of indecision. When we see these inside bars, they're indecisive. We see outside bars, they're normally impulsive, showing us a real change of sentiment. In other words, the rally is stronger or the sell-off is stronger if we get an outside bar. If we get an inside bar, it's just showing us that that week hasn't been as impulsive as the sell-off was the week before. If we go to the daily chart, here we can see an ending wedge pattern. We did make a lower low. We thought we might get down to this level, and that was actually our trigger level for our medium-term sell trade 2 weeks ago, actually, 1160. But we've seen this move to the upside. Again, similar to the dollar index, indecision at the end of last week. What I like here, and this is to highlight at least a short-term bias to the downside, is again the Elliott wave formation to 1, 2, 3, 4, and then potentially up in 5. Now, 261.8% is located at 113.90. We've got some bespokes resistance at 113.65. Scope for further buying at the beginning of the week, but similar to the dollar index, I think that upward pressure is going to be limited, at least for the time being. Cable. Let's break down the big time frame here. This is the monthly time frame. An outside bar. These are also known on a monthly chart as an acute monthly reversal candle. But there's obviously a hell of a lot going on in the UK. Political turmoil is what is to put it lightly. This formation would suggest that we have an eventual bias to break to the upside, and what I do like is the fact that the Fibonacci levels line up. This should be an impulsive third wave as far as Elliott wave is concerned, so 1, 2, and then rallying higher impulsively. But, and there's always a but, if we look to this chart, and again going back to D-Mark, posted a 13, that is an exhaustion count. That normally highlights the base of a trend. Got a bullish engulfing candle. We had indecision. We've had mixed trading for the last 3 weeks, but let's put it that way. Bullish, bearish, bullish. We've now pushed higher, but we've got that time frame highlighting really the next move should be aggressively higher. But then if we look to the daily chart, this looks like a bearish wedge formation. Now we could take the trend line from here. It still makes it a bearish formation, but the only difference being is actually where your target levels are for a breakout. So at the moment, the bias is still to the upside for sterling dollar, but we've got what's going to be the top of this wedge formation at 134.38, a break of the base of this wedge formation at 130.30, and I think the minimum that we should see is here, because you could take the wedge from here or you could take the wedge from here, and you could see a move all the way down to this level. So really, cable, I don't think it's really one to get too involved in next week again, because of, well, A, political turmoil. You're getting moves of 300 points a day. You've got a counter outlook as far as the technical picture is concerned. You've got the monthly chart highlighting really a bullish bias, the daily chart a bearish bias. In fact, if we go back to the monthly chart just quickly, and we count back these months, 1, 2, 3, 4, and then we take the close of that month, which is 127.48. That is the break point where sterling dollar stops being bullish and starts being bearish. So 127.48, if we come back to this daily chart, it's just underneath that wedge target. So we have got scope for a move lower. The intraday chart is really showing very little. We've got no exhaustion counts, no correction counts, but I think the upside could be limited, but buying into dips around about that sort of 127.70, which is the wedge base, and 127.48, which breaks that excuse me, which is the level that breaks that monthly bull count, if you like. Dollar Swiss, and again, we like the bearish outlook with the dollar. What normally happens here when we form a wedge formation, normally hit the trend line resistance 3 times, and we haven't done that. We've posted an inside week, which highlights indecision. And again, what I quite like on an intraday basis or a short-term basis is this 4-hour chart. 1, 2, 3, 4, and then going down here in 5, and that probably will be a very good area to buy into next week, because we've got 99.81 is a 261.8% extension level, and 99.76 is our bespoke support. So we like these confluence areas, and really, if we go back to that weekly chart, there's a chance that we might make, it might not just be corrective the move to the upside, that we might make a higher high to get to the top of that wedge formation before we see dollar selling. So quite like dollar Swiss dip buying next week for potentially a more aggressive move to the upside. Dollar yen. Let's break down 3 time frames here. We'll go to the weekly chart. It's an inside week. What does an inside week highlight? Well, we've discussed that. It highlights indecision. If we go to this time frame, Elliott wave formation looks to be playing out. 1, 2, up to the 161.8% extension level at 111.83, and then a choppy move to the downside. Now, that move to the downside at 3 negative days. Then we've had this mixed week. You know, 2 up, 1 down, 1 up, 1 down. Again, with rallies up around this 111.82, finding selling interest. Now we've got some bespoke support at 110.78. It's a weekly bespoke support, and that basically means that even if we push through it, as long as we close the week above it, then it remains quite bullish. If we go to this time frame, intraday time frame, normal fourth wave corrections are in 3 waves. First wave normally being impulsive, next wave being corrective, etc. So we've had an impulse move to the downside in what we think is the AB wave. These are actually formatted incorrectly. Should be AB, BC, CD. So BC, choppy price action to the upside. Expanding wedge formation, and expanding wedge formation has a bias to break lower. So the intraday bias is for a break lower in this last leg. Now 110.78 is here. We've got the wedge target 110.72. We've got the ABC target around about 110.50. So there is scope for a move lower, spike through, completing that fourth wave in the bigger picture on the daily chart, and then this expected continuation to the upside for dollar yen. Dollar CAD. Now we did call the head and shoulders formation. It didn't push to our expected target level, which is a little bit disappointing. Let's have a look. We've got an inside week, so a bearish outside week keeps the bias to the downside. Inside week is a highlight of indecision. Let's go to the monthly chart, because I think this is quite important to highlight the long-term picture for dollar CAD. This is a strong bearish outside month. Okay, that is the Marabuzo level around about 134.15. That's been sold into. This move up looks corrective. Could even be seen as a wedge formation if you break down to shorter time frames. So this is sort of highlighting that the long-term pictures, the long-term focus, we should be saying, yes, let's sell dollar CAD. The weekly chart highlights indecision. The daily chart, we got to the 161.8% extension level, that then posted a engulfing candle formation, went to the downside. Couple of days of indecision at the reverse trend line support. This was our head and shoulders target level. I think that's voided now, really, with a retest. Even though we've retested and stayed inside this reverse trend line. If we go to this time frame, which is the 1 hour chart, that last move lower in 5 waves. And again, I wouldn't write off this downward move yet in dollar CAD. We've got the 261.8% extension level at 132.66, and then we've got our bespoke support at 132.76. So that's really a short-term buy level. But like we're saying, the move to the upside could then be limited in the way of economic releases next week. Let's just have a look to see if there's anything that could drastically change the direction of the Canadian dollar. Well, we've got RBA meeting on Tuesday morning, UK average earnings, UK ILO employment rate on Tuesday, CU survey, Bank of Japan minutes on Tuesday night, Wednesday CPI inflationary figures for cable, and then obviously the FOMC monetary policy statement rate decision on Wednesday. So that could well be the catalyst for the dollar. Thursday, unemployment rate for Australia. Swiss National Bank rate decision as well on Thursday. Bank of England rate decision on Thursday. So it's quite a busy docket next week, but really nothing for the Canadian dollar, nothing really for oil. So can't see really a major sort of catalyst for a strong dollar CAD rally up to that aforementioned head and shoulders pattern. Aussie dollar. The big picture. The big picture is bullish. Are we making a reverse head and shoulders pattern? So this will be the head, left shoulder, right shoulder. Neckline looks a bit iffy, to say the least. If we go to this time frame, we've talked about this quite a lot. This ABCD formation playing out, we like it, or we like buying dips down here because we've also got the 61.8% Fibonacci pullback level. To the upside, there's resistance at 71.22. Let's think about what the dollar's going to do, or what we think the dollar's going to do at the beginning of the week. We think that the initial sell-off could be limited. If that is the case, then the initial rally in Aussie dollar should be limited. So again, 71.22. It's pretty pivotal. It doesn't really scream out anything else too obvious, unless we stick a trend line on there, maybe. But I think the short-term outlook is still to the downside, but the long-term outlook for me especially is to buy into dollars. Buy into Aussie dollar. Euro sterling, and again, it's a pretty mixed picture here. I've got sort of 3 different time frames showing different formations. We've posted a bearish outside month going back to January. We've had that sell-off, or that follow through. What I did like about this formation was the fact that the 161.8% was near the wedge target. But I've had a bit of a rethink, and here we can see an impulse move to the upside. This move is strong, aggressive. 1, 2, 3, 4, 5. Is it a 5th wave extension? If that is the case, then this whole move lower is corrective. If we go to the weekly chart, an ABCD formation is located here, which is 84.10-ish. There's bespoke monthly support at 84.62, and again that means that we can spike through it. As long as we close above it, then that support is deemed to hold. If we go to the daily chart, mixed volatile trading, looks like an ending wedge pattern. So we're sort of getting the monthly chart giving us a bearish outlook, but could be limited really with the whole thing lower being corrective. The weekly chart shows an ABCD formation. The daily chart shows an ending wedge pattern. Again, the scope for a move to the downside, 84.60, is that bespoke support, and that really, if I put it on there, could be tomorrow. 84.60 trendline support. So limited downside, I think, really for sterling dollar, euro sterling. Sorry, it's a high risk trade, but with decent risk money management, I believe it's quite a good outlook to take. A break here, which is around about 86.40, and the measured move target is 88.40, which is the start of the wedge. Real mixed picture in euro yen. The monthly chart doesn't really sort of give us anything away. We've got an inverted hammer, or a hammer base, which normally highlights the end of a trend. We've got dips being bought into near the Ishimoku cloud. If we go to the weekly chart, we've got an inside week highlighting indecision, reverse trendline resistance located at 128.15. I think we have to say really that the medium to long-term outlook is mixed at the moment in euro yen. We can't really get a half decent focus on it, but the intraday chart, similar to suppose euro dollar, we could see limited upside. We've got a DMARC 13, often highlights the end of a trend and at least a correction to the downside. Could be seen as 5 wave count. So if we just go to our Elliott wave, our Fibonacci levels holding up quite well. There is scope for mild buying at the beginning of the week, but I think that will be limited. We will see that at least a correction again, sort of looking at euro dollar and all the other dollar-based currency pairs. I think we'll at least see a correction to the downside. So just to reiterate, the dollar index looking bearish at the moment. Are we going to see that 5-wave completion? Virtually every time frame in the dollar index looks bearish going into this week, but with a scope to sell into corrective rallies. And that's what we're going to be focusing on across most of the dollar majors, apart from dollar yen, where we'll actually be looking at buying into dips. Okay, I hope you have a great week. I hope you found that informative. Let's talk again next week and see how these forecasts played out. Okay, many thanks.